with us. Um, my name is David Freeman. I am the business coach here at BCL. Um, One of the things I want to touch upon is make sure that everyone keeps their phones or keep your lines muted. We will have question and Q&A after the presentations, so you can jot down your questions and then we can move from there. We will send out this recording. Once everything is done, we'll send it out to you along with the contact information for our speakers. First, I'd like to start off and I will introduce Bonnie Crockett. She is the Director of Small Business Lending here at BCL.
Hi, everyone. Most of you know me. Very nice to see everybody again. Thanks for joining us. Baltimore Community Lending is a nonprofit CDFI, and a CDFI is a community development financial institution. It's a certification by U.S. Treasury that basically says we are a mission-driven lender as opposed to a profit-driven lender. And our mission is to make loans in underserved and disinvested neighborhoods and underserved folks, and that is what we do. So before I tell you about our background and our small business lending program, I want to introduce Watchin Bruce, who is our president and CEO.
Hey, thank you, Bonnie. To John Bonnie, I want to welcome everyone, and I want to thank our staff for organizing this very important event. This is needed. The topic is point on, it's necessary, and more successful small business owners that are constantly learning and also working on their businesses achieve a lot. So these are the topics that they need to grow and expand their businesses. So it's not just access to capital, but also it's getting out of the business and working on the business, because you could be working in and you bury in and not knowing what's happening. So I'm glad that our team decided to do this workshop. So I want to thank our speakers, because I know most of you, and also to thank the participants, those who are on the line today. So welcome again and enjoy the workshop and share it with others, because businesses need to do more learning and grow their businesses. So thank you.
Thanks, Watchin.
Okay.
Just to give you a little background, you've probably heard of Baltimore Community Lending, or BCL. It has been around since 1989. It was originally created as an arm of Baltimore city government with the intention of making real estate development and construction loans for affordable housing and community development. And then they went out and became a 501c3 nonprofit corporation and were certified as a CDFI. So they've been making real estate development and construction loans for 33 years. But about 3 years ago, we started making small business loans, recognizing that buildings alone are not going to transform neighborhoods. You need small businesses to bring products and services. They bring jobs. They bring entrepreneurial spirit. So before we started making small business loans, we did our research to find out why people are told no. It is so difficult to get a small business loan. And all of the research that we did really pointed to the same answer. The primary reason was from $5,000 and up, pretty much all small business loans require collateral. And the people least likely to have collateral in the entire state of Maryland are BIPOC and women business owners in Baltimore City. So we created this program where we make loans to small businesses without requiring collateral. We now have made 60 loans for dispersing about $3.7 million in Baltimore neighborhoods so far in the last 3 years. We make loans of $10,000 to $50,000 to startups and up to $150,000 to existing businesses at an interest rate of 7.25% currently. Instead of asking for collateral, we require that all of our applicants complete a small business training program. It's free, it's one-on-one, and we meet you where you are. Some folks, it might be one conversation. Other folks, it might be months of working on financials and business plans. It really is up to you. And the person who takes care of that, who works with our small businesses at BCL, is David Freeman, our Small Business Training and Development Officer. And I am now going to turn this meeting over to David and let David and our speakers take it away.
Good afternoon, all. Again, I appreciate everyone's attendance. We're going to start, as far as with the agenda, it's going to start with Mr. Venroy July. He's the managing partner at Dickerson Wright. He's going to discuss the 5 business entities or formations for businesses, and I'll give you pros and cons. Second up, we will have Sharif Small. He's an account owner at SJS Financial Firm. He's going to discuss keeping your finances in order, bookkeeping, taxes. Ashlyn Hood, financial advisor with Edward Jones, over 16 years as an investment advisor. And she is going to talk about key person insurance. And last but not least, it's going to be Stacy Smith. She's a business banker at Fulton. So after you make all this money, you want to have a place to put it. So she's going to discuss your services, small business services, and business accounts and bank credit. I will turn it over to Mr. July.
Well, thank you, David. Thanks for having me. This is a topic that's really near and dear to my heart, just because I work with businesses constantly. So just as a bit of background, as David mentioned, I'm a partner in the corporate and finance group at Dickerson Wright PLLC, which is a law firm based out of Detroit. I am in the DC office. Prior to that, I was at Miles and Stockbridge here in Baltimore. And Watson mentioned earlier about the Bonnie might have mentioned about the difficulty in getting capital for BIPOC companies, and this is something that I think interrelates to the access to kind of legal assistance for many members of these BIPOC communities. And so for that reason, last year I had actually, at my prior firm, started a program that allowed us to give free legal services to members of Black-owned companies, recognizing the lack of access to capital actually dovetails very nicely into the reason why many don't end up being able to get legal services and aren't able to set the foundation for success for their businesses. And so I talk about this consistently because I think there's a lot of misinformation out there about, the types of entities that you want to form and what the purpose of those entities are. And so I'm just going to kind of run through the entity structure. But the reality is that I think, legal assistance is necessary at all steps of a business's life cycle, right? You need to understand why you're setting up a business the way that you're doing, what the structure that you're utilizing is, what the pros and cons of that structure are. But certainly after you've developed a company, it doesn't end there, right? You're going to have to be entering into contracts. You're going to have to need someone that's going to be able to assist you in doing so. And so that's where, an attorney will be able to assist there. And certainly to the extent that you are, successful, potentially looking for exits or raising additional capital is something that attorneys are obviously going to be helpful for as well. We actually work very closely with other service providers similar to the ones on this call, because I think that all of us are essentially the team to kind of help you to be successful. And so with that, let me start. So I think there are, for our purposes, essentially, 4 structures that you kind of interact with on a regular basis that you hear about. It's a sole proprietorship, a partnership. Now, a partnership can be either a LP, a limited partnership, or a general partnership. You also hear about an LLC, and then you hear about a corporation. Some of you, I'm sure, have also heard about this concept of an S Corp. That's not actually like an actual entity form. It is an election that you make with the IRS. And so we'll talk about that as well. All right, so sole proprietorship. Sole proprietorship means that you are running a company. You don't actually have to form it with the SDAT, or in different states, they have different bodies that you have to file it with. If you are running a business, and you have not actually formalized an entity, you are running a sole proprietorship. The concern there, though, and with all of these issues, the 2 considerations really come down to taxes and potential liability. That's really where, if I'm going to talk about what the real the significant considerations in which form of entity that you form are, it really comes down to liability and taxes. All right. And so for the sole proprietorship, you are the business, right? So to the extent that you are getting, if the business is getting sued, you are getting sued. They're going after your personal assets. And so you need to understand that you have unlimited liability there because the business and yourself are interchangeable, right? And, again, because you haven't actually formed an entity, it's just you. So taxes just basically flow through to your personal income tax statement, and you are just paying taxes on that revenue regularly, right? So sole proprietorship, essentially you are the business, right? Then we talk about partnerships. A partnership is essentially similar to if you have a sole proprietorship, if it's more than one person, right? So you and someone as a general partnership are running the business. You have not necessarily filed, the other types of form documents for that type of form of document of organization, and you are operating a business, right? Again, the issue there is that you have unlimited liability, but now it actually gets worse, right? Because theoretically, if your partner does something, you can also be held liable. They can go after your personal finances for that, for that. And so I very infrequently ever recommend, I don't think I've ever recommended someone run their business as a general partnership, just because it ultimately causes you to have so much liability for people who are not necessarily even doing the things that you are doing. And so it just never actually, I don't think I've ever recommended that as a part of my legal counsel in my 15 years that I've been practicing law, right? Now, you have seen this structure that has gotten created over the years called a limited partnership. And a limited partnership ultimately serves to kind of try to isolate liabilities of people who are just investors. And you see this structure particularly used for real estate investments. So a lot of the developers structure their entities as an LP. And what does that mean? So it essentially says that you are, it makes a distinction between those that are actively involved in the management of the company and those who are really just investors. I'm putting my money up and I want to get a return, participate in the return, but I don't want the risk. All I want to be at risk is the money that I'm putting up, right? And I'm not going to be operating the business. I'm not like acting on a day-to-day. And so I shouldn't have the liability for the actions that that person is taking, right? But the issue is that with that entity structure, you have to make sure that you are maintaining certain formalities. So if you are an LP and you are actually helping in the day-to-day operations, they can essentially pierce the veil and cause you to have liability as well. So you guys have to be very careful if you're trying to structure your entity in that way. The much more regularly utilized structure that kind of helps to get you the benefits we're talking about from an LP is an LLC, a limited liability company. And I often recommend this structure for for people who are starting out their businesses, because it actually provides you the dual benefit of it causes you to get limited liability. So only the assets that you're putting up potentially are at risk, with the caveat that you have to make sure that you are maintaining the corporate formalities. Because a lot of people think that, oh, once I start an LLC, that means that I'm good. But if you're using your own bank account to fund the business, or you're using more importantly, you're using the business's bank account to fund your own personal, living, there's a concept in corporate law called piercing the corporate veil, where they can essentially look through the business to you directly, and therefore you won't have that actual limited liability, which is one of the main benefits of having an LLC, right? The other piece we talked about earlier is that it's personal liability and taxes, right? For an LLC, which you see the comparison is really to a corporation on a tax perspective, because in an LLC, essentially at the end of the year, the LLC gives you a K-1, and that just flows. It's called in the legal jargon, it's called a flow-through entity. the profits that you get from that company, they just flow through onto your personal tax return. And so you get a K-1 and they're reflected on your personal taxes. So you're not paying taxes twice on that money, which is different from the corporation structure of a corporation, which is the real differentiator between an LLC and a corporation, right? So the other structure which we're talking about is a corporation, which this is the structure that people often run to me and say, oh, we need to form a corporation. Someone has told them that they want to form a corporation, particularly if they think that they're ultimately going to be trying to raise money. And this is honestly in large part remnants of us, the way that venture capital money has been structured in the past, and just bad advice, quite frankly, right? So a corporation does have the benefit, right? A stockholder in that corporation, so long, as they're keeping the same corporate formalities, which are actually significantly more rigorous than for an LLC, they have limited liability, right? And so stockholders aren't getting sued for actions of the corporation, so long as they're maintaining the corporate formalities. Now, again, a corporation is much more rigorous. You have to have annual meetings. There are just certain requirements that you have to have in order to kind of maintain that corporate structure. The issue with a corporation, why we often don't recommend people doing corporations when they're starting out, is the need to have the concept of double taxation. So, right, the corporation is its own separate entity. So that money gets taxed, the profits of that corporation gets taxed. And then to the extent that that corporation pays out dividends to the individual stockholders, the dividends on that money also gets taxed. So you get a double taxation on the same dollars. And so that is often why we end up not recommending that people do corporations when they're starting out, just because the reality that most people, as they're starting these businesses, they're not that sophisticated in terms of like the development of the company. And so it's just not necessary to have kind of those blockers or that separation of a corporation versus the individual stockholders that you can't accomplish through just doing an LLC with appropriate safeguards. I will just say the caveat there is that many people, as they're looking to raise capital, they often want to do a corporation just because, quite frankly, a lot of venture capitalists and investors, that's the form that they're used to. They are used to buying stock and they're getting a percent, stock in the company. And so you often hear investors ask the companies to either convert to a corporation, or they're asking them if they are a corporation to start off with. The actual process of converting an LLC to a corporation is relatively simple. And so to the extent that you end up going down that path, that you're looking to raise capital and they're making that request, it's a much easier move to go from an LLC to a corporation. The benefits are significantly, compared to the cost benefit analysis, it's a much better and simpler move. So with that, I see that I'm coming up on my time. I will just also jump and say that, just because I know that some people are going to have questions around this S Corp. The reality, again, S Corp is really an election that you make with the IRS. And as a practical matter, the way that we end up seeing it utilized is to the extent that you're going to be paying you're going to be making enough money that you're actually going to be able to pay a salary. There are some tax benefits that you get from making the S election in terms of the employment taxes that you don't get if you have not taken the S election. So with that, I will pause and allow for the next speaker. Thanks.
Thank you, kind sir. Next up would be Mr. Small.
Yeah.
Sharif, are you frozen? I think maybe Sharif is frozen.
Afternoon, everyone. Finances and
There he is.
nonprofits. We also do, hello? Are we connected? Hello?
Yes, we got, yeah,
Now
we
we
lost you for
are.
a little bit. Yeah, we got
You
you
were
back now.
frozen for a minute, but you're back.
Oh, was I?
Yeah.
Okay.
You're
I guess
back.
I
Thank
should,
you.
Yeah,
I
start
guess
with
I
your
should
intro
start
again.
all over. I
There
guess
you
I
go.
need to start all over again. I was talking to myself. Okay. Um, so again, name is Sharif Small. I have a tax accounting and financial planning practice called SJS Financial Firm. What we do is bookkeeping, payroll, and taxes for small business nonprofits. We also do personal financial planning as well. So our goal, the course, and our objectives is to make sure number one is to get your books in order, right? Because that's one of the biggest issues that people have. And watching mention, a lot of people focus on the sales, they focus on the market, they focus on working in that business, but not really working on that business. And that's very, very key. And because it's understandable, you start a business, you want to use your skills, your talents, and offer your services to the public. But what I see on the back end is, the lack of the attention of the accounting and the taxes and things of that nature. And that's where we come, is getting your books in order. Number one, that's the first thing. And the first thing we gotta do is separate your books, because unfortunately, when a lot of people are operating, they're doing it out of their personal account and they're commingling. If they're getting 1099 income with their W-2 income, they got their business expenses coming out, but their personal expenses, you're just creating a horror movie. So what we try to do is peel those layers and separate it. And Vimboy mentioned is the entities that's used to form your business, whether it was a sole proprietorship or LLC. Either way you do it, make sure that you go to the Maryland Business Express, website, where you can pretty much, form those entities, get that EIN number, right? Because that's because you have to have documents for, for Miss Smith over at the bank to be able to open up that business account. But you need your articles or whatever, and until you form then your EIN, and you need to go and separate that and get that separate business check account. So once you do that, make sure you take advantage of the legal deductions that are out there, because it's not just if you get audited by IRS, is when. Because they do audit a lot of small businesses, but then also we know how your business is doing as well. You want to be able to create profit loss statements. You want to be able to create balance sheets, because you need to know how your business is doing, the financial health of your business, because that's going to help you to grow your business, to get access to capital. Number one, that's what banks and CDFIs are going to ask for, these statements, for them to lend you money. They want to know how your business is doing, financially. Also, we're looking to hire employees as well. So working capital, things that you're looking to, purchase your office building in the future. I was very blessed to buy my own building in 2018, because it gets to the point to where you want to get out of your home office and purchase, but you're going to need those financial statements are in place. So this first thing we will start at, once you go to the bank and get that separate business checking account, that's where we come in, and you want to need a bookkeeping software. I recommend QuickBooks. Please, you need to have a system in place to be able to legally record your transactions and to put them in categories. What I love about QuickBooks, and there's other options that are out there. You have QuickBooks, you have Xero, you have Wave Apps, you have FreshBooks, which I think is all great, but you need to pick something, and you need to get a software that's going to help you to separate your business and be able to put your transactions in categories. One of the great things about QuickBooks, they have different subscriptions. They got the starter, they have the essential, they have the plus. This is based on what your business needs are. But the good thing about it, once you get that business checking account with Fulton Bank, you can add your login information to the QuickBooks, and you can actually download your transactions and put them in categories. I highly recommend, please, that you do that. I highly recommend you meet with an accountant to be able to set up your chart of accounts, because a trucking industry is different than a salon, business. So the accounts are going to be different. So you want to make sure that it's set up towards your industry that you're in. So it makes sense to the bank. The bank need to know the type of expenses that you have and the type of revenue that you receive, and also the type of assets they have. So I highly recommend meet with accountant to be able to set up your chart of accounts within QuickBooks. But as I mentioned, you're able to add your bank account. It's your login information. It will legally, download your transaction. The next thing is being able to put it in categories, whether it, to make sense. The first thing I see, the issue that I see what people have is, people have a home-based business. Let's just start with that. What can I deduct with my home-based business? Well, the first thing, it must have a room exclusively for the business, right? A desk, a table, a chair, and a sign on the door, right? It cannot be your kids' room. A lot of people do stuff in their living room. If you have a basement, that's great. If you have a garage, that's great. But you need the square footage of that room divided by the square footage of the house. The difference is where you can deduct your utilities. It's just a portion. So if your square footage of that room is 100 square feet, just keep it simple, and your house is 1,000 square feet, then you can deduct 10% of your utility. That should be G&E, your Comcast, portion of your homeowner's insurance, but you should not be deducting your mortgage interest on that. That's the biggest issue. I'll see people deduct their mortgage interest on, when it comes to the home office and also on the personal side as well. Is either or. So you want to kind of keep that on the personal side, and that's the 8829 form that has to be, completed. Now, of course, it gets to the point to where it mentioned in 2 to 3 years you want to buy your office building. I highly recommend think about buying your office building as opposed to renting. But you got to be have those books in place for the next couple of 2 or 3 years, hopefully 3 to 5 years, to show that you have some revenue coming in and that has been clean and it's been, that has been recorded. And there's other funding sources out there that we can kind of touch on. Another thing too is keeping track of your mileage. That's the biggest issue. People say, yeah, I drive here, I drive there, I drive everywhere. But okay, what was the business use? How much did you travel the whole year? And out of that, what was your business? Did you document? No, I can't record it for you because you say you're going everywhere, but the IRS want documentation. That is key. One of the great things about QuickBooks, it has a QuickBooks app on your phone. I mean, this is your business, your baby right here. You can download it and you can keep track of your transactions on your phone. But then also on top of that, they have a mileage component with the QuickBooks app. So you can add your company, your vehicle to it, and then everywhere and tied to your GPS. So everywhere you travel, you should be swiping right for personal or left for business. So at the end of the year, I know if you travel for 10 times out of the year, and out of the 10 times, I'm sorry, not 10 times, but 10,000 out of the year, 3,000 or 3,000 was used for business. So now I know that you use your vehicle 30% of the time, right? So then we can appreciate 30% of the cost of that vehicle. So the vehicle doesn't have to be in your name. It just can be for business use. But you got to have documentation. So when you get audited by the IRS, they see that you're keeping track of the business. So you have the QuickBooks mileage app. You also have Mile IQ, which you can download as an app. It's around $5-6 a month or $50 for the whole year. And everywhere you travel, you got to make sure you're recording it. So at the end of the year, you have that report. You can send it to us, and you can deduct 58.5% of your mileage for your vehicle. And then also you can appreciate a portion of your vehicle based off that usage. Now, if you are thinking about, you can refinance or you can buy a vehicle in your business name. One of the great things about it, if you've been in business for 2 years, if you go to a bank, they will allow you to finance a vehicle of your business name. And a good thing about it is that it's not on your credit report. So that kind of helps with your debt to income ratio. The interest rate may be a little higher on the business or the personal side, but that's one of the things you can do, or you can refinance it in your business name, as long as the mileage is not as high and that may have, different requirements. But that's one of the things you can do to kind of help you to be able to, legally deduct your, business expenses. You may want to buy in other vehicles outside of just the business use of your vehicle that you have. If you have a transportation business, those where you have two options. You have the standard deduction, which is the 58.5 cents a mile, or you have actual expenses, right? You cannot deduct both. You can't deduct your mileage, and then also you're deducting, the tires, and you're deducting the fuel and the repair and maintenance. You have to pick either or. If you're in a transportation business where I have a good amount of clients that already got a lot of vehicles, they'll deduct the fuel because they're traveling every single day. They'll deduct the tires because they got a 16-wheeler and the tires cost about $1,000, and the engine, that's the lifeline of their business. They'll wind up doing that. If you like a real estate agent, you may want to keep track of your mileage because it's just different than being in the transportation. So you have to decide basically industry which one, but you got to pick one. You cannot, do both. So those are the top two, like I say, home office expenses and vehicle expenses, which is that. The third thing I would say is what are your startup expenses? What does it cost? Your website, getting business cards, professional development. If you're paying for books, if you're say you attend this type of professional development and there are fees involved. If you go to a networking event, there's fees involved in your marketing, your services. These things are legally deducted. Again, you just got to make sure you keep track of it. And a lot of times that you're paying for stuff, a lot of times you get receipts, right? One of the biggest other issues I see is that people say, well, I haven't kept track of anything, but I got all these box of receipts right here, right? So, which is okay, but if you hand your receipts to your accountant, especially to us, a lot of things we want to do is hand it right back to you because you don't have the receipts for the whole year. After a year, the receipts don't fade. Now it look like a horror movie. We don't know what you bought. So you should not just run your business with box of receipt. That's what, again, QuickBooks come in, you add your bank account, you got bank statements. You have to, in addition, once it gets recorded, you gotta make sure you reconcile your books. So we do bank reconciliations to make sure everything matches, right? You also gotta do journal entries and things of that nature. Say also you look into, so I highly recommend if you do get receipts, a lot of times you get them electronically, right? So you buy something from Amazon. Who doesn't shop at Amazon? I recommend get the Amazon Prime, which is the business. But if you have Amazon, they will email your receipt in your file folder, right? In your email, whether you have Google, Gmail or Yahoo, whatever business, what you use. In your Google Drive, you want to create different folders in that for like different expenses. So for your cell phone bill, for any utilities or supplies, when you pay for stuff, make sure you put it in those files when you get the email. So you pay for supplies or anything like that, put it in the file folders in your email. And then also use Dropbox or Google Drive. You got legal documents that you have. You want to put that in a drive. So those are, and you give people access to those that are actually helping your business. So we always create like Google Drive or Dropbox. So you put your legal documents. If you buy a vehicle, we need to bill a sale form. You put that in a Dropbox. I'm able to pull it from instead of, ideally not sending everything online. You got to be careful sending like tax returns. And I try to stay away from those. Have those Google Drive and Dropbox where you just put it in there, give us access, we're able to pull it and make sure that we're able to record. So buying vehicles, bill of sale forms, got to make sure you take care of the back office stuff. So, when you get audited by the IRS, within an hour, you want to get them out. Like they want to look and see that everything's in order, right? So then they know that within an hour they're out. When you have stuff all over the place and they there all day, they're gonna find stuff. So we want to make sure that you have everything that's in place. So you want to make sure that you keep your files, in good order. So I highly recommend get those file folders in your email address, whatever you use, Google or Yahoo, whatever you do. You can create file folders, and when you're paying for stuff, put them in. Even if you next thing is mails. You can deduct. Well, this year and last year, you actually could deduct 100% of the meals. In the past was 50% of the meals. I think this probably be the last year you can deduct 100% of your meals, but in the past it's 50% of your meals. So if you take a client out or a prospect or anything like that, when you get the receipt, I highly recommend you using your business account or business credit card. I highly recommend you can apply for a business credit card because you can use that business credit card to get points, to get rewards that helps you to build your business credit. And then you just pay it off, with your, debit account. You'll get a receipt. I would recommend with your phone, take a picture of it. You can actually email a copy of that receipt to you. And again, create a meal and entertainment file and put it in that file. And then you got to put who you met with and the reason. Just write it while you writing the tip and all that, because they'll charge you 20% tip. Put in who you met with and the reason, and then you just put it in that file. So use your phone. These phones are not cheap. They're very expensive. These are, and you can, you're using this for your business. You're able to use these things as much as possible. I highly recommend take a picture of it and put it in, that file. So it is tips and tools that you really need to take advantage of. There's tax credits out there too. You're looking to hire people. The Maryland Department of Commerce has a list of tax credits that you can take advantage of if you're hiring those that are ex-felons, those that are disabled, the ex-felons, those are the disabled, those are in the military, they have tax credits when you're looking to hire people, for that. Also, you're providing health insurance and employee benefits. These are things that tax deductible, like health insurance. These things are tax deductible, and you can also get a credit on top of that. One other thing that, and I'm not sure how much time I have left, one other thing is, when you're looking to build your business, you want to use this to build a legacy and generational wealth. You want to think of generation, right? You're looking to hire, your employees. You need access to capital. But one of the things I always highly recommend you think about is, what about your kids? Age 7 is the earliest you can hire your kids in your own business. Why you want to do that? Instead of paying them allowances, you pay them wages, and it's tax deductible to your business. Age 7, do not underestimate your kids. Your kids at age 7, they're very techy, they're very trekky. They can really they can probably work a cell phone and a computer better than you or your grandparents. So I highly recommend put your kids on payroll, right? So you can pay them up to $12,000 each, right? Age 7 kids and grandkids, right? And put them on payroll, right? And then you don't have to hold any federal, no state, no Social Security, no Medicare tax. Why? Because they're under the age of 18. And you can still claim on your tax return as long as you pay them up to $12,000. Take that $12,000 and set up a Roth IRA for your kids, right? So out of that $12,000, you can set up a payroll deductible Roth IRA. The only way you can set up a payroll deductible Roth IRA is if they have W-2 income. Well, ding, 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 they have W-2 income, right? So out of that $12,000, put $6,000 in there. Now they learn that it's not about making money, but now they learn how money works. You got to learn how to make your money work for you. That's in interest mutual funds, stocks, bonds, compounding interest. They get the age from age 7 to age 18. They have money for college because they can pull money out without 10% penalty. Still taxed for no 10% penalty. What if they don't go to college? Then the first $10,000 they can use for a down payment on a house, right? And so you are really building generational wealth for your kids. So you not only just think about owning a business, but think about owning the building of your business, right? Think about owning, your kids can own an apartment complex. When they go to college, you can buy a 4-unit and where they can be an owner occupied. And then you are the non-occupied owner. And then you can rent out other rooms, and then you have cash flow and capital coming in. So again, these are things that you can use when you're starting a business to leverage that to build generational wealth for your kids and your grandkids. I just think that's key. When you think about starting a business, you're not just starting a business for yourself, but you're leaving a legacy for your kids and your community as well. So as you're starting the business, think of things that you can utilize where you can bring your family involved, and then you can have them, 30, 40, 50 years, you're building that business, your brand, and your business still around. Your kids are benefiting from it, grandkids, but then the community is benefiting from it, as well. So I'm not sure how much time that I may have left. I think I may have gone over. If I did, I do apologize, but I can kind of leave more later for any questions.
No, we appreciate it. Thank you. Next up will be Ms. Ashlyn Hood. She is going to discuss key person insurance.
Wow, thank you, David. I truly appreciate it. I have so many talented professionals on this presentation. I am really honored to be here. I have been in the business for 17 years. Most of those time I have been working with business professionals. And they are really good at what they do, extremely good. What they're not really that up on is how to prepare for the unexpected, how to protect their business in case something, life happens. So I want to discuss with you Keyman Insurance and a buy-sell agreement. Some of the questions that I will be answering myself is, what is Keyman Insurance? Who is a key employee? Why is key employee life insurance even needed? How does it work? And what are the benefits? So let's start with what is Keyman Insurance. Key person life insurance is designed to protect a business against potential financial loss caused by the death of an employee who is critical to the success and the profitability of the business. The business is the owner and the beneficiary of the policy. Now, who is a key employee? Well, a key employee is anyone who contributes significantly to the financial success of the business. A key employee who may or may not be an owner is anyone who is responsible for management decisions, is highly paid, has a significant impact on sales, or has a special rapport with customers or creditors. They're extremely valuable to your company. Now, why is key employee life insurance even needed, right? Well, a business can suffer from a key employee's debt in a number of specific ways. For example, one is the loss of the person's management skill and experience, especially in a business with little management debt. Another is the disruption of business when clients withhold or delay business dealings until the impact of the employee's debt becomes known. What about credit? Credit difficulties can arise since creditors often remain cautious until they can assess how the key person's debt will affect the business. And most importantly, increased expenses that comes about from having to hire and train someone new to replace that key employee. Now, how does this key man insurance actually work? Well, the business notifies the employee that, hey, you are special to us. You are key to this business. And we would like to purchase a specific amount of life insurance on your life. And the key person consents in writing. The business applies for and is the owner and beneficiary of the life insurance policy. If the insured employee dies, the business receives the policy proceeds. Premiums are not deductible and the debt proceeds are usually free of federal income tax. Because the business holds all incidents of ownership in the policy, the debt proceeds are not included in the insurer's estate for federal estate taxes, unless the employee is a sole or a controlling shareholder. Well, in that situation, a corporation incident of ownership are attributed to the shareholders or the employee. Now, what are the benefits of this? Now, why would any business want to do this? Well, the key person life insurance serves a number of uses benefiting a business, both during the key's life and after the employee's death. Debt proceeds are generally exempt from income tax when the notice and consent requirements have been met. If the insured employee doesn't die while employed, the policy cash value is available to the business. Key person life insurance demonstrates financial stability to creditors. If the key employee is an owner of the business, the policy can help fund a buyout of any business interest when debt occurs. If the employee lives, the policy cash value can be used to provide employee contribution. Key person insurance is used a lot with business owners when they have an employee that they value. They value the expertise, they value the advice, they value the experience, and knowing that if that employee, if anything is to ever happen to them, how would it actually affect the business? Would it slow it down? With things where you have to delay things until you find a replacement? And all of those scenarios can be a little bit costly. Next, let's discuss what is one of the most popular agreements which is a buy-sell agreement. A buy-sell agreement ensures stability in business transactions and prevent the heirs from having to run or sell the business after the owner dies. The last thing an owner wants is the spouse who have no business knowledge or have never even been to the business to all of a sudden want to be an owner when they have no idea what the business is about. With a buyer in place, a life insurance policy assures that funds will be available when needed. How does this buy-sell agreement actually work? There are three main types of buy-sell agreements. The first is the cross-purchase agreement. Each owner buys part of the interest. Each owner buys insurance on each other to fund the purchase. Hence, cross-purchase agreement. I have insurance on you, you have insurance on me. Anything is to happen, we are both covered. Then we have the entity purchase agreement. The business itself buys the interest. The business buys the insurance on each owner to fund the purchase. When you're a business owner, you are essential to that business. You are valuable to that business. Your absence could make or break that business. Most of the time, it will break it. Then we have the one-way agreement. This is when an individual, usually right back to the key employee, agrees to buy a sole owner business. The buyer typically purchases life insurance on the business to fund the purchase. So a key employee might turn around and say, hey, if something happens to you, what happens to me? You have insurance on me. So now this key employee can actually buy insurance on the business itself. So if the owner dies, they can take the funds and purchase the business from the spouse or whoever whoever the heirs might be. Now, why is this useful? A buy-sell agreement ensures an orderly transition and alleviates conflicts over the value of the business. The heirs, they get the cash that they need, because most heirs really don't want to run the business, and most of the time they can force a sale. And the surviving owners are sure that the heirs or a stranger cannot insert themselves into the business. The agreement at that point is airtight. The business is protected, and we all know that business owners have this great ability to ensure that their business is successful. They work hard, they spend long hours on the business. The one thing they always forget to do most of the time is protect their hard work. With a key man insurance and a buy-sell agreement, you're ensuring that if the unexpected happens, that your business is protected the way you would want it to be protected. So thank you so much. And
Thank
that's
you,
my
Ms. Hood.
10 minutes. Thank you.
Thank you, Ms. Hood. Next up, you will need a place to put all that money. So we have Ms. Stacy Smith.
Hey everyone, how are you doing today? Thanks for having me. I have a presentation that I'm going to share with everybody, so give me a moment to grab that. All right. Can you see my screen?
We can see it.
Perfect, perfect. So I appreciate everybody on the call. Great, thank you. So today we're going to talk a little bit about where all of that money you're going to be making with your small business should go. And we're going to talk about establishing a relationship with a business banker like myself. So if you have a business banker already, that's great. You want to try to meet with them on a, annual or semi-annual basis, if possible, just to go over your business, do a well-being meeting just to make sure you're on track of where you want to be for your goals. So it's really important, like everybody has talked about already, establishing your business. So you want to register with the IRS, so you have the EIN number, and that is a separate number from your social. So you have your business EIN number, and then you have your social security number. So this is going to be different. Unless you are going to be a sole prop, then you may use your social for that. And then you want to go to the Maryland SSTAT to form your business. So we talked about the entities, so you can choose what entity, work with an attorney, decide what's going to work best for you and how you want to run your business. So you're going to choose whatever works for you, and then you're going to register it online. And if you choose to do a DBA, which is doing business as, you will need to get a trade name document. So if you choose to have your business be, an LLC working as one name, but then you want to have it as Smith DBA, you just want to make sure that you do the trade name, and that we also will ask for at the bank. And then identification, we would just need your ID, so state issued or government issued ID, driver's license, passport, social security number, things of that nature. And then depending on what type of business you're in, you may need to have a business license. Most businesses are going to have a license, so you may want to look into that and what that's going to cost you, depending on the type of industry that you're going to be in. So just to kind of do a little bit digging into who we are with Fulton. We are in Baltimore City, but we also are around Maryland. We're in a 5-state radius. So we do offer our business account information. So we have business checking, which is our standard checking account. Now, if you're a startup or if you're a business that just has small limited transactions, this is a really popular account that we start a lot of our businesses in. Their items less than 200 credits and debits going in and out of the account. There is no monthly maintenance fee or minimum balance requirement, which is really nice, especially for startup businesses or businesses that don't have a lot of activity going on in their account. This is a really great account. And then we also have our premium checking account. And this is where if you have larger balances that you keep in your account on a daily basis, you can upgrade to the 400 items. And then if you keep this in, you won't get the monthly maintenance fee. So there are different accounts that you can choose based on your business needs. And we would talk about that when we sat down to talk about your business, what activity was going on. We really like to have a deep dive, especially at the beginning, to learn about your business. We want you to learn about who we are and how we can benefit you as a business owner. We're very convenient. We're a full service bank. So we offer online banking along with mobile banking. You can do mobile deposits through the mobile banking app. So we offer a full service that any other bank can offer. So let's do business credit is a huge topic that a lot of our small business owners ask. So how do you build small business credit? What does it mean? How does it work? So when you are establishing a business, a lot of banks unfortunately don't lend right off the bat to small business owners that are less than 2 years in business. We do require at least 2 years in business, but we have a great working relationship with Baltimore Community Lenders. So we work very closely with them. We'll send clients to them if we can't help them, if they're too new, if they don't fit in the parameters of the business lending piece. We do really help. We want to get our clients the help that they need. So first you want to understand what a Dun & Bradstreet. So it says here, get a DUNS number. Dun & Bradstreet is the business credit score. So if you have a business credit score, please put a 1 in the chat if you want to participate. I would love to know how many of you know what your business credit score is, or know if you have a business credit score. Does anybody know? Okay, great. All right, so we have one person so far that knows, that's fine. So Dun & Bradstreet is a really great website. You know, the website, you can register your business, you can create a profile, you open accounts that report. So we as a financial institution report to Dun & Bradstreet. So when you open up a business credit card or business loan, we're reporting your business credit. You can also add accounts. So if you are working with an individual or you're working with a creditor that does not report, you can go on and try to add those accounts to report for you. And then you want to make sure that you're paying your bills on time or before they're due. You really want to take care of your business credit. Like Sharif was saying earlier, you know, you want to make sure that your personal and your business are two separate entities. You do not want to commingle those. So I like to tell people, just think of them as two parallel lines working side by side, but not necessarily crossing paths. You know, with your personal credit, they are going to look at personal credit for credit worthiness, but they are going to have the debt be under the business. So you want to make sure that you are aware of what your business credit is. If you're not aware, you know, get on the Dun & Bradstreet and check it out, because it is important to keep that in mind, especially when you're ready to apply for credit with a bank or with any creditor. They're going to ask what your credit score is. They're going to run credit. So it's good to know both personal and business. And then try to keep your debt under control. So, you know, don't max out credit lines if you don't have to. Maxing out credit lines can really hurt your credit. So you do want to try to keep those, you know, I try to say no more than 30 to 50% of the credit line usage, but we know that life happens. So if you do get closer to that, you know, 80, 90 mark on your credit usage, try to pay that down as soon as you can. No, to freeze. There it goes. So creditors are going to look at the 5 C's of personal credit. So they're going to look at your character. So this is your personal credit. They're going to look at, we as a bank, when we're looking, we look at our FICO credit score for your personal is going to be 650. And then your Dun & Bradstreet SPRI, which SPRI is very similar to Dun & Bradstreet. It's on a different scoring, but it is what the creditors are going to look at. It's SPRI is not a score that you can know or I can know. Our underwriters get a report from the credit bureau when we run your business credit to find out what that score is. So the minimum score we require is 835. So the better Dun & Brad, when I say the better Dun & Bradstreet score you have, the most likely you're going to have a better SPRI score. And that's made up of, you know, industry, your business industry that you're in, but then also your business credit. So it's got a few different factors that it makes up. Capacity. So is your business cash flowing? So Sharif talked about cash flow. We as a bank, our underwriters are going to look at cash flows. We have documents we're going to require at time of application, and they're going to do a cash flow ratio, and they're going to look to see if your business can pay back the amount of the loan that you're looking for. And then collateral. So we are going to look at collateral. So what type of collateral do you have? We can take several different types of collateral, but we are going to look at that. If it's over a certain amount, then we are going to require collateral. If it's under a certain amount, we may be able to do unsecured. It just depends on what you're looking for and what the usage of the needs for the loan are. Capital and contribution. So based on what your business assets are minus your liabilities, and then the condition of the loan. So they're going to look at, you know, what the loan is, what the usage of the loan is, and you know, how healthy the business industry is. So if your business is in an industry that's not doing very well, that may deter the underwriters from lending credit. So those are the 5 different C's that they're going to look at. And we would have a very in-depth conversation before we applied for any loan. So you have a full understanding of what you're getting into, you know, what we have to offer as a bank, And then we want to make sure that, you know, we're not just applying to apply. We want you to understand that this, you know, this is what's needed and how we can help you. So just a brief overview. This is just our product lending guide for the businesses. We can do lines of credit and we can do term loans. There are some changes on this sheet that we just updated. It's not updated on the sheet yet, but we can actually lend up to 500,000 for any businesses that are 2.5 million in annual revenues or less. So that is my small business division. So I can do up to 500,000 in loan request, which is different than what's on the sheet. The fees have been adjusted a little bit, so those are a little bit different. We're waiting for the sheet to come out with the updates, but we can talk in depth if this is something that you wanted to move forward. Again, 2 years in business, as long as you're in 2 years in business and you have tax returns to show the 2 years, that's what the underwriters are really going to look for. They want to see on paper, is your business cash flowing? Can you pay back the loan? You know, you're going to have to fill out a personal financial statement showing, you know, any of your personal assets as well. And then, like I said before, you can apply for business credit right when you get started. So business credit cards, there is no timeline. This is just an overview of the different business credit cards that we have to offer. So based on your business needs, based on the size of your business, you know, how do you like to be rewarded? There are lots of different ways that you can use these business cards to a benefit of you and your business. You know, if you want cash back, you like cash back, you can put the cash back right back into your business banking account. You can use it towards your credit card statement. So there's a lot of ways you can do it. We have our rewards program. So if you have employees and say you want to do an employee appreciation day, maybe you use the rewards points from your business credit card that you've already earned to do a gift card or employee appreciation, and get a few different gift cards, things like that, that you can kind of show appreciation to your team, but then also you can give back to your business and make it, you know, make it work for you. So this, you can start building business credit right away. You don't have to wait the 2-year mark, which is really nice. And then this is just my contact and resources. So this link here will take you to our website, it's Fulton Bank, and it's going to take you to our education center. So we do have a little small business link that you can go to within there, and it talks a lot about different small business things that we have to offer. And then we also have just our Fulton Bank home site, so you can explore. We also offer with, you know, your business, we do offer our workplace banking program. So with workplace banking, any employee that works for you or yourself can take advantage of a special account that we offer on the personal side. So that's also nice to give back. And we have a workplace banking representative that will come out and do financial literacy. We are big on financial literacy as a financial institution. So we do all sorts of, we do personal business, all sorts of things. So we can also help your employees along with you and give you a special account where you can get some benefits of that too. So I appreciate your time. I know that, you know, we're running up against the time, so I appreciate it. And if you have any questions, please don't hesitate to reach out. I'll put my contact information in the chat, and thank you so much.
Thank you. Great job to all of our speakers. I appreciate the valuable knowledge that they provided. A hand clap to you guys. It up now for questions, if anyone has any questions.
Hey, great afternoon, everyone, and thank you all for putting this wonderful, I'm gonna call it a seminar together. I know it was brief and direct and quick, but just want to thank you, David. So I have several questions that I wanted to ask, and I'm just going to kind of run down my list. But the first question is to Ms. Bonnie. One, do you have to apply for a loan in order to be a part of the the business program that you all offer for free, or could you just be a part of the program before you apply for the loan? And then to them, Roy, the question that I had, because a lot of times I think, I know myself personally, I get confused around like LLCs or how to properly structure it. And I heard you say that you have a program that offers free legal services for business. Is there like an application that individuals like myself can engage in prior to? And sorry about my background, my puppy, he wants to be a part of the call, so sorry about that. He only do it when I'm talking. So like, is there like an application where I could, speak to someone about, my business structure, the things that I'm doing right, the things that I know that I've done wrong, given the fact that I'm new to entrepreneurship? Sharif, I don't have to ask you any questions because we worked together plenty of times, and Sharif is like my big brother, and he invited me to this. And so I was pretty much the nightmare he was talking about, mixing personal and business. And so he was talking to me. Ms. Hood, I don't have any direct questions for you, but I would like to understand key employee life insurance and how does that work, maybe like for a nonprofit versus an LLC. And then Miss Stacy Smith, what I'm going to do is I'm going to call you because I have more than what time would allow. There we go.
Well, I'll give you a quick answer first, since you started with me. And don't worry about the puppy. I don't know if you saw it, at least it wasn't when I was talking, but I had a cat circling my computer too, and walking back and forth in front of the camera. She shows up every time I Zoom. But anyway, as far as offering services to non-applicants, basically our small business training services are for small business loan applicants. Now, you won't be completing a loan application until you finish the training program. So, I mean, you don't have to apply first and then, participate. You can participate, work with David for any length of time, but the idea is that he would be getting you ready to submit an application. That said, there are other programs around that provide that kind of training for free. SBA has offices in a couple different locations, including our building on Holland Street. Usually they're tied to universities, and we can give you contact information. The City of Baltimore's Office of Small, Minority, and Women-Owned Businesses has some free training programs. So there are some other options out there, and we can share those with you too. And ultimately, as we grow and develop, because we're growing pretty rapidly on this small business side, we've only been doing it for 3 years and we are exploding at the seams already. We are eventually going to set up a business development center that will offer those kind of services aside from our lending program. But that's probably a year in the future. We need, first of all, the space to do it, and we're already outgrowing the space that we're in. So that's my answer to that, but feel free to talk to David if you think you will be looking at putting in an application when you're finished the training. And otherwise, I'll get your contact information from your registration, and we can send you a list of other opportunities or free options for that kind of support. Okay.
I guess I'll jump in next. So I wanted to clarify. So I mentioned a program that I'd started when I was at my prior firm. I've left and it being prior. So I'm not sure. I honestly have not really kept up as to whether or not they continue to do the program. So I don't want to just speak for them. So I will say that, quite frankly, the reason why I thought that program was necessary is because there is really a gap in the market for, provision of legal services for, not like for people who are starting up businesses. And so that was why we started the program. But, I'm I'm just not sure if the program is continuing. And quite frankly, what we learned was that we actually were getting overwhelmed because it was just so much demand for that service that I'm just not familiar with whether or not they're going on. But if you ever want to talk, obviously I'm available. We can discuss.
Yeah. If I can add something on top of that, if that's okay. I just put in the chat the Small Business Development Center.org, which is connected under the SBA, because each county and city has like their own location where they can provide those technical assistance at no cost. And then also I put SCORE in there as well, because these are retired executive, retired business owners that can give you advice on growing your own business. And then Mayo, just give me a call and I'll be able to help you out with some of the stuff you just asked about.
Good idea for thinking of SCORE as well.
Yeah.
And there are 2 SBDC offices in Baltimore City. So
Yep. Yeah, because you have the Small Business Resource Center, which is actually under the mayor's office with Paul Taylor.
right.
And then if you're in the county, you have the Small Business Development Center, which I think the last check was, I think it was at Towson University. I believe that it is. Because I think, Mayor, if you're in the county, then you go there. If you're in the city of the Small Business Resource Center, but the city and the county actually are working together with the technical assistance, and I actually help them out with that as well. So
Cool.
Hey Mayo, thank you for your question. I really appreciate it. Whether there's a difference between nonprofit and for-profit for Keyman Insurance, there really isn't a difference. It all depends on how important that person is to your business. My nonprofit clients are the ones who get Keyman Insurance more than any other business that's under me right now. And the reason why, they depend on individuals to help bring them in profit, other than non-profit, but bring donations into the company, and they will do whatever it takes to protect that person. So Keyman Insurance is about protecting the key person in your organization, regardless to who it might be. It might be as simple as a secretary, and all the clients just love her, and you know that if she leaves, some people may want to walk out the door with her. So it's protecting your business and protecting the people that you consider to be valuable to your business. And that could be almost anyone. And it really doesn't matter if it's nonprofit or for-profit organizations. There's always somebody in your company, maybe it's just you, who is valuable to the business. I hope that answers your question.
And Mayo, nice to meet you. I look forward to hearing from you. My information is in the chat, so please don't hesitate to reach out. Perfect.
If there are no other questions at the moment, I just want to say a couple of things.
I think I saw somebody ask something
Oh,
about
did you
veterans.
see a hand go up?
Well, it was in the chat. I can actually answer that if that's okay.
Sure.
I'm actually I teach I'm a government contractor at SBA, so I teach this some of their small business classes. One is called the Booster Business. That is for veteran-owned businesses. I teach at Fort Meade, Everly program, Fort Detrick, and then I wound up doing some of those in the community. So it's called the VBOC, Veteran Business Outreach Center. I'll put that information in the chat where they have the workshops. And if you're not able to get on base, we also teach them online too through Zoom. And then we also have another one called a Reboot workshops as well. So I saw someone put in there so I can get the information for the small business. It's a 2-day class for businesses from starting to growing their own business that we that we teach. So I want to make sure we get that out there. And then also just any veterans that are on the call, thank you for your service as well.
Okay, well, my 2 comments, they weren't really questions, but they were just comments to sort of emphasize what some of our speakers said. First of all, Enroy said he never recommends partnerships. And I have to say that the Venroy, I'm struggling between the computer changing the way I spell your name and me saying it. I'm never getting it right, but it is Venroy, and I hear you. Mr. July said he doesn't recommend partnerships. In my many years of working with small businesses, the biggest disasters I have ever witnessed were because of fights between partners. I've seen partners steal from each other. I've seen partners get violent with each other. And I've seen partners not be able to qualify for a loan because the other one had a bankruptcy or some problem with their credit. So, and that was probably the least of the problems that I saw. So I strongly suggest from my own experience, not to go there with the partnerships. I had a client once who said to me, but my boyfriend and I never fight. And I thought, well, right, that should end well. So yeah, don't go there with partnerships, make it an LLC. You can still work with people, you know, as members, but you don't share their personal liability.
Can I just
Yeah, go right ahead.
put a point on that? And I always say this to people, right? When you're first getting into business, things are always great. You're always excited. You always love each other. You're excited about the potential, about what's going to happen and how much money you guys are make. It's not until you actually need it that you regret not having a document that actually spells out what your rights are and whose liabilities and how that is. And so regardless of structure that you end up utilizing, I just would say that make sure, you know, separate from the fact that we don't use general partnerships, you know, even if you're doing an LLC where you're going to have additional members, you want to make sure that you have a document that very clearly spells out what the rights and obligations of each person are, and do not skip that step, because it always ends up costing much more than you think it's going to cost to actually put that together.
Absolutely. And I will also note that, you know, law firms and accounting firms that are traditionally organized as partnerships for purposes of, you know, actually encouraging people to join for, you know, future growth, you'll see them all registered as LLPs now, which is the sort of the partnership version of LLC. So if the law firms know better, you definitely want to take advice from them. And then as far as some of the comments Sharif made about QuickBooks, I just want to say I was running a nonprofit once years ago, and we just weren't sure we knew what we were doing in terms of financials and books and anything else, and nobody really felt like an expert. And so we went out and got QuickBooks, and we actually paid an accountant to set it up correctly for us. You know, so he reviewed our books annually after that, but we didn't, you know, it was a way to get support from an accountant in the setup, even if you couldn't afford to pay an accountant on a monthly basis to review your books. And we felt much more confident that we were doing the right thing with QuickBooks because they helped us set it up.
Yeah, if I can add on top of that, especially with nonprofits, you know, for-profits are different than nonprofit. They have different requirements. So even with nonprofit, they have their operational expenses, and then they have their program expense. They have to be classified based off of the type of grants that you get in. And I think the more grants that you go after, they're going to require an audit. So, you know, with the audit, you definitely have to we're going through right now. My next door neighbor is actually auditing one of my clients' books as we speak, because she's sitting on $250,000 just waiting for it to hit her account. But she can't even do it until we was able to clean up her books, make sure that it meets the nonprofit requirements. And then now he's actually going through, and I think we got it pretty much done. So from the for-profit and nonprofit, I highly recommend you have those charter. That's why I mentioned your charter accounts are set up based off of the industry that you're in. And especially with nonprofits, or even if you're doing a project, you want to classify, because you may have a donor that may say, I want to report based off of how much we give you. You want to know where the money's going at. So it's very recommended you hire a professional, number one, that know what they're doing, and they can actually be entwined to your needs are, so your books look successful, because when your books look successful, then your business is going to be successful as well.
Well put. I think we have one more question up here, Ms. Wise.
I have a question and a comment. So first, my comment is for any new business owners that might be on the call, I think Baltimore Community Lending is an absolute amazing organization that you need to get connected with. A very short story about me. My business has grown exponentially over the last 2 years. going from 0 to 7 figures. And if it wasn't for Baltimore Community Lending, I don't know if I would have been able to get to that second comma in 21 without the support and the funding that they were able to provide for me. So I'm just letting y'all know, like this type of environment and panel and connection, like just get into it, because there are people here that really want to help and are really vested in seeing small businesses win. So Ms. Bonnie, I'm gonna be talking to y'all soon because I'm coming back. In addition to that, I did just have one quick question about joint ventures. I know a joint venture is not like a tax identified type structure, but is that recommended? I think Mr. July did mention something about that paperwork that you should have put together when you are moving forward with a partner or other people. So is the joint venture something that should be considered as well? Or is...
Yeah, I mean, I can answer that. So a joint venture is essentially when you have basically different companies that are decided to basically team and work together to kind of accomplish a certain mission. Quite frankly, a JV agreement ends up looking very similar to an LLC agreement. I mean, what it ultimately is just, it's a document that's going to set forth the responsibilities and obligations of each party, and how money is split, whose costs, obligation things are, how things get decided. So it ends up being very similar to an operating agreement for an LLC. But again, with all of these business structures, you want to have documentation. Depending on your particular circumstance, whether or not you're going to JV with another company can make sense, but just make sure that you have really as tight as you can get document that kind of talks about what your obligations and benefits are. Somebody said, we were told.
Sorry. Go ahead. What was that?
I was just saying, someone had made a comment in the chat about
where are you?
They advise that they have to set it up as an LLC. You don't technically have to. You see that set up very often as an LLC. And it's because in large part, you're going to end up using LLC agreement form to just specify what each of the parties' obligations are.
And joint ventures, and please correct me if I'm wrong, but joint ventures are typically for a project or as opposed to a long-term, partnership. But you see a lot of joint ventures, for example, in building rehabs, when there's multiple people invested in that one particular building, and when that building's done, end of joint venture. Is that right?
That's how you mostly see them, but we've seen, large, companies do very, very long-term type JV agreements. But again, it's just a matter of making sure you have the tight documentation around it.
Yeah, if I can real quick add something on top of that, especially for those that probably haven't formed any business entity yet. One thing I would say, do not use LegalZoom. Please stay away from that, because unfortunately I've seen so many people form their business on LegalZoom, and they spend way too much money where they can go to, once they get the right information, go to Maryland Business Express, and they can form if it is an LLC or if it's a trade name, which is a whole lot less. And I think on top of that, another issue I've seen is make sure if you do have an LLC, you stay in good standing with the state. You pay that $300 and also have that personal property tax return done, because I've seen that where people can't open up a bank account. They can't even get no capital. They can't even do any government contracting or even get any funding on their nonprofit because they're not in good standing. So I highly recommend that you make sure that you stay away from LegalZoom, and then make sure that your business is in good standing. The department, even on Maryland Business Express website, when you form an account online, they have it where you can actually, that can be completed online as well, because it's all public records. So I highly recommend staying in good standing with that.
We require it.
Yeah, everybody requires it. Yeah, please.
So any other questions before we go? Well, I'm sure David will wrap it up, but I just want to take a minute to say thank you so much to our speakers. It was an absolute pleasure to have you. Thank you for the promo, Bianca. We appreciate that too. And we hope we see some of you soon and can help you grow and start or grow your business.
Hello, we were getting your information, would that be emailed to, sent out to us? Because this is very good. I have questions I couldn't get on here because I want to listen to everybody from all the speakers, because it was very good information. So will we be getting?
Yes.
Yeah, go ahead.
Yes, we'll be sending a recording out of the presentations, so you'll get that as well as their the presenter's contact information.
Oh, great. Thank you.
And again, I can't say enough. I really appreciate everyone's participation, speakers. I really appreciate it. You guys did a great job. And I'll wrap it up with that. Bonnie kind of summed it up for us.
Thanks, everybody. We'll
Thank
see you
you.
next time.
Have a good one.
Thank you, guys.
Thank you for the
Thank you.
opportunity.